9 juicy stocks to pick up on this dip. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove it. And today, we're going to do what we do every single Saturday and speak about 10 stocks to keep a close eye on next week. What an absolutely insane 2 trading days we had on Thursday and Friday. Blood all across the market. Red days in the Nasdaq, the Dow Jones, the S&P, everywhere you can imagine. The biggest companies in the world, like Apple, dropped 8% on Thursday. And it was just the most hectic couple of days of trading we've had in such a long time. Now we have a 3-day weekend. Everybody has a little bit of time to gather themselves and reflect. And now it's time to figure out, what do we want to buy at a juicy discount, baby? Because I don't know about you guys, but I prefer buying stocks when they're cheaper rather than when they're more expensive. So there is an awful lot of stocks that I would be happy to buy at these current prices, but today I'm going to bring you through 10 in particular from a range of different sectors. So right before we get into the video, people, can I please ask you to hit that juicy like button, people? It means a lot to me. It really helps me out. If you're new around here, what are you waiting for? Hit that juicy red subscribe button. As I'm recording this, we're about 200 subs away from 30,000. That is mind-blowing stuff. And please do drop me a comment down below as well. Let me know what you think of any of the stocks we speak about today, or else what stocks you plan on potentially buying next week. With all that being said, guys, into the first company of today. Right here, guys, Virgin Galactic, ticker symbol SPCE. You will all be aware of who these guys are, and if you've been on the channel for a couple of months, you'll know that I am very bullish on this company in the long term. With that being said, only a month ago, we were above $20 a share. Yesterday, we just got into the 15s. And if we actually go back just a little bit further, all the way to the 22nd of July, we were actually above $25 a share. Since then, we're down 37%, people. Now, the very first thing I want to say about Virgin Galactic, okay, is it's traded around the $15 mark quite a lot over the last few months. I also want to say that this could be some dead money for a while. And what I mean by that is there's not necessarily the most catalysts in the world until early next year. I honestly expect this company to trade anywhere from $14 to $20 over the next few months. This here is really what we're waiting for, okay? Virgin Galactic billionaire Richard Branson to fly into space in early 2021. This is what we are waiting for, and this is what I believe will make the stock go parabolic. Now the thing is, okay, this has been pushed back multiple times already, and as a long-term investor, I'm honestly fine with it. In fact, I'm quite happy about it. I'm not very happy with my position in Virgin Galactic yet, okay? There's been a lot of companies as of late that I've had to prioritize getting my money into because there are growth catalysts coming very soon. Workhorse, Hyliion, Lordstown Motors being examples. And then I've also just wanted to dollar cost average into some of my big tech, like my Apples, my Facebooks. So Virgin Galactic has kind of been put on the back seat. But at these prices, guys, anywhere below $16, I mean, I feel like it's going to be a steal. Now, that's not to say that it can't go lower in the short term, but in the long term, all going to plan, it's going to be an incredible entry point. So Sir Richard Branson will fly into space on a Virgin Galactic rocket ship early next year if 2 test flights go to plan. So there are 2 more test flights that should be happening this year. If they go to plan, that's it. Richard Branson is going to space, which is absolutely insane to say. If Richard Branson is the first man to commercialize spaceflight, I don't care how much money they're losing. I don't care how few customers they have. I don't care how expensive the ticket is. Without a doubt in my mind, this company is going to go parabolic. It will be technology that nobody else in the world has access to, or more than likely will, for years after. And this could genuinely happen as early as the first quarter of next year. So there's not a lot of hype in these guys right now, because there's not that much up and coming news until early next year. Yeah, we have our 2 test flights, and we might see, you know, some small bumps up in value if they go well, but crazy things aren't going to happen until Richard Branson goes to space. So that's why I do think it could be dead money for a little while. But if you plan on holding this company for 5+ years, who really cares if it doesn't do much for, you know, anywhere from 3 to 6+ months? So why it's down so much right now, the main reason is Richard Branson was meant to go to space this year, but obviously it was pushed back, largely because of the Roni. And I mean, you just have to be extremely confident in your business when you're going to space. And I mean, you can't afford to have any cracks in your business when you're bringing people to space. I mean, it's not like opening up a McDonald's and, you know, the ice cream machine breaks for a while. That's not going to have any catastrophic effects. Virgin Galactic needs to be perfect before this becomes a reality. But that's the first company of today, Virgin Galactic. Now look, I don't want to speak about loads of EV stocks today. I might make a separate video on the state of EV in general relatively soon, but I do want to bring up Tesla. So I mean, Tesla's just been insane. There's no other way we can say it. Just yesterday, okay, we went from $420 a share all the way down to $372 a share. We proceeded to close the day in the green at $418 a share, and now after market we're down 6.41%, largely due to the fact that for some reason Tesla didn't get included in the S&P 500 and 3 other companies did. Now before we get into the price and things like that, am I necessarily surprised we didn't get included in the S&P 500? Not necessarily. Am I a little bit upset? Yes, I was hoping we would get included, but at the same time, I think all of us knew that there was a decent chance they wouldn't get included this time around, but that doesn't mean that they won't ever get included, people. And again, if you're a long-term investor, especially when we're speaking about Tesla, I've said this in every video where I've ever spoken about Tesla, you better be ready for insane volatility from start to finish. I don't think this is ever a company that will just steadily grow. So they didn't get included in the S&P 500, 3 more companies did. Tesla's worth 9 times more than all 3 of them put together. It's a little bit ridiculous, but I also understand. They literally only just qualified for eligibility. Anything could happen with Tesla. I get it, I do get it. Now I know I'm speaking about stocks to buy on the dip, though I think they're a buy at this price or even $391. You know what? Long term, potentially, but it's when we start dipping into, you know, the mid 300s to the low 300s is when I would really, and I mean really, be ready to buy this company. I only have 5 shares in Tesla and I'm up about 20%. I've already made the decision that I don't plan on selling them, and I also do acknowledge there's a very, and I mean very real possibility I could go into the red in this position. I've learned my lesson with Tesla already. I don't want to time this company. I believe that if I hold this company for 5 years, I will end up making considerably more money than I will make if I try to sell at the highs and buy back in at the lows. My plan with Tesla is just to buy considerable dips. And yes, we already are at a very considerable dip of down 16%, but I have my position. And you know what? I'm happy enough with my position. I will only add more if we lose a considerable amount more value. What I will say is, if Tesla's a company you want to get involved in, just remember the battery day is coming up the 22nd of this month, and more than likely, that will do some very good things for this stock. We all know that market movers are playing a heavy role in market manipulation right now. Tesla is a company, you know, that has these insane swings. It would not surprise me if some market makers are trying to get this stock to go lower to buy in before battery day. And it would not surprise me at all if by battery day, or the days after battery day, we are above $550 a share. But that's the second company of today, Tesla. Considerable dip, decent price point, but I think we could potentially have lower to go. I don't plan on selling, and I do plan on buying. What needs to be said about Apple stock, people? Okay, beautiful company, amazing company, one of my favorite companies in the world, okay? Just a couple of days ago, we had a $2.25 trillion market cap. Yes, $180 billion worth of this company's market cap got wiped out overnight. We had an 8% dip there. Go to the 6-month chart, you will not find another 8% dip aside from when the market crash was happening. And continue to look at the 6-month chart, it is nothing but steady upwards growth. And they are at a 36.77 PE ratio. I mean, for a company like Apple, in my opinion, that's low. I know traditionally it's very high, but to me, that's absolutely fine. Considering how many different aspects they have to grow, to expand, that to me is fantastic. Am I willing to buy Apple at this price? 1,000,000% yes. It is not very often at all you will get a considerable discount on Apple, and it would not surprise me if we are back up above $130 a share within a week or two. It really, really wouldn't. Now, at the same time, would it surprise me if we went down a little bit lower? Honestly, no. All things considered, the stock split, etc., we definitely have room to go a little bit lower. But do I think we're going to stay down there for a prolonged period of time? Not whatsoever, people. This could be a video in itself, but I want to just read this headline quickly. SoftBank identified as the Nasdaq whale that bought billions in stock options, betting on higher prices for the biggest names in tech. SoftBank is a large reason for this pullback that we've just seen. I mean, they're out now, guys. That should be the majority of the pullback, in my opinion. Now, it could have put some fear into the market, etc., and some other people could sell off. We'll have to wait and see. So Friday, the Dow lost 0.5%, the Nasdaq 1.25%, and the S&P 0.8%. Much better day than Thursday, where the Dow was down about 2.5%, the Nasdaq 5%, and the S&P 3.5%. And there were certain sectors, EV for one, that actually did well yesterday. My portfolio ended the day in the green. It was the craziest day I've ever seen. But this is over and done with now, people. I don't really think we're going to see a crash. We'll have to see how the market reacts. I'm very happy there's a long weekend now, though. But it's Apple, guys. I mean, I love them to pieces. Okay, Facebook, people, a company I bought for the first time at like $205 a share. I bought all the way up. I currently have a cost basis of around $240, I believe. These guys took a decent dip, but it was nothing crazy, about 6.5% over the last couple of days. Again, a company with a PE ratio of 36, a market cap of $805 billion. They own Facebook, they own WhatsApp, they own Instagram, 3 of the biggest social media services in the world that I guarantee pretty much everybody in the world with a Wi-Fi connection uses on a daily basis. Massive player in advertising. We've gone up above $300 on 2 separate occasions now. We're currently sitting at $281 fun in the after hours. I think I've made my stance on these guys quite clear. I love them as a long-term hold. I mean, if you're willing to hold this company for 5+ years, I think the odds of you not making decent money are very, very low. And I just think that the earlier you get involved, the better. Again, we look at the 6-month chart and it's just up. Now, Facebook is one that does see a considerable amount of, 5% dips, but they also see more 5% up days. But the thing is, the majority of the time with Facebook is if you're waiting for a dip, it's already going to be too late. Facebook literally has pretty much the best balance sheet you can find out there for any company, which essentially means they can do whatever they want. Facebook is known for buying smaller companies, whether it's for management or the companies themselves, like when they bought Instagram for $1 billion and now it's worth $100 billion. They've bought so many small companies you've probably never even heard of just for the management teams, and they have enough cash to continue doing that. They've shown that even things like ad boycotts don't affect them. I mean, they took this dip and they shot straight back up in value, and they just proceeded to boom up since then. Amazing company. They're not going anywhere anytime soon. The longer you hold on to them, the more likely you are to make decent money. I love these guys, and I think everybody on this channel knows that at this stage. Okay, we have Upwork stock, a company I have had my eye on for literally months and months now, but I've never pulled the trigger on. If we look on the monthly chart, okay, it's very jaggedy, but ultimately we're down 7.5%. If we look on the 6-month chart, we see absolutely immense growth. But if we go back to the peaks in May, as of right now, we're not even up 0.5%. Or they were up as much as 25%, but it's another one of these companies that, it moves an awful lot. And what I will say about this company is it could be a decent while before your investment comes to fruition. I think that's part of what, kept me out of it for a while. But I am closer than ever to investing in them now. If you want to know exactly when I do invest in them, hit the first link in the description. People sign up to my Patreon and become a Discord member. You get all of my buy and sell alerts. But right now we're sitting at $13.95 a share. We have a market cap of 1.68 billion, okay? Their main competitor right now is Fiverr, no doubt about it. Fiverr has a market cap of 3.91 billion. And on the monthly chart, Fiverr is down 9.4%. And on the 6-month chart, we see some immense growth for Fiverr, nearly 250%. Right now, there's no denying that Fiverr is definitely the biggest player in this industry. If you don't know what these companies do, it's essentially a website where you can go and hire a freelancer to do some work. So I could pay somebody to edit my videos or to do my thumbnails, and there is loads of things that these companies offer. So we can see that Upwork has an average daily volume of 2.85 million shares. They have a float of 87.33 million, so it can be quite a volatile company. And the percentage of shares held by institutions is actually at 74.29%. And there isn't really that much short interest. We can see that shares short are currently at 3.63 million. Now, if we look at analysts in regards to earnings, so our next quarter, which will be the end of this year, okay, we're saying about -7% CPS. For the current year, we're looking at 0.33, and for next year, we're looking at 0.19. So not a profitable business by any means whatsoever yet, but the trend is good. And there is actually a high estimate here of pretty much breaking even as early as next year. And I mean, we're estimating some nice sales growth here. 17.6% for this year, 14.8% for next year. So their vision is to be the #1 flexible talent solution in the world, which obviously would be absolutely fantastic for investors. And what does really get me excited about a company like this is the whole, move to work from home scheme. A lot of people want to be self-employed now. So freelancers on the supply side, okay, there's 161 million service jobs globally that can be performed remotely. 53% of Gen Z are freelancers. And then in regards to clients, 63% have remote workers and 48% use flex talent. So there's a massive market opportunity here. And I mean, what's really amazing about this is the fact that, you can hire somebody from completely and utterly the other side of the world. Your target audience is not limited to your area like a normal shop would be. They also say this right here, which is something that is extremely important, okay, when we're looking into this company and treating it as a growth stock. By 2025, online talent platforms could add $2.7 trillion to global GDP. That is an insanely huge market size. That is insane. And if we have a brief look at some highlights from the second quarter 2020 results, revenue grew 19% year over year to 87.5 million, exceeding guidance. So exceeding guidance, especially in the times we live in right now, is an amazing thing. And we also see that marketplace revenue grew 19% year over year. So gross service volumes increased 12% year over year, and the gross margin remained unchanged. But look at what it is. 71%, massive gross margin. So the net loss had gone up big time, okay, 11 million compared to 2.5 million. Well, this is a part of investing in growth companies, guys. You're all going to be aware of that. So as of August 4th, Upwork is providing the following guidance for its third quarter. Revenue in the range of 89 to 91 million. So I mean, they're looking to grow again, and they also bet guidance last time. And weighted average shares outstanding in the range of 121 million to 123 million. That's fine. But anyway, guys, I don't want to spend too much time on this company. If I do decide to invest, I will end up making a full video on them. But I think at these prices, if you missed out when we were around the $12 mark, we're still looking very attractive. But again, I do want to make it very clear, I'm not personally invested just yet. Okay, Walmart stock. Now, I want to make it clear from the start, I don't like investing in retail companies in general. I've spoken about these loads of times, especially for somebody who doesn't like investing in retail companies. But for the right kind of investor, I do think these can be offering a fantastic opportunity. We are at a PE ratio of 22.77, which is great. On the 1 month chart, we're actually up 10%. We dropped over the last couple of days only 3.28%, so absolutely outperformed the market. So there's a few things I like about Walmart, and this right here is one of them, okay? Walmart stock gets a $24 billion boost after retailer announces a subscription service. So Wall Street reacted positively to news of Walmart Plus's launch date and perks for members. Whether customers embrace a subscription service or not will obviously influence if the big box retailer can keep its sales soaring and wallet share expanding like it has during the pandemic. Walmart is leaning on its grocery business and its footprint of more than 4,700 stores by delivering food and other items from its brick and mortar locations to members' homes as fast as same day delivery, which I think is going to be massive. And this is also something I want to point out because a lot of people have done it in the past. I actually made a full video on this before. Comparing Walmart Plus to Amazon Prime is like apples and watermelons. There's no comparison. They're completely different things. Don't even bring that up. Now look, it's a company that more than likely I will never buy into, even though I do like what they're doing. It just doesn't grow fast enough for me personally, and I don't see enough growth catalysts for this to ever be, you know, a really fast growing company. But if you're the kind of investor who is happy with some, you know, more than likely above average growth and a small dividend yield, this could be absolutely fantastic for you. I really like what they're doing in regards to their same day delivery. I like what they're doing with their online sales. I like the fact that, you know, I know for a fact they're in talks with EV companies, new fleets. I like a lot of what they're doing. So again, the odds of me actually buying this company are very low, but I still want to put it onto your guys' radar because this could be a fantastic opportunity for you. And on a 6 month chart, guys, they're doing very well, up 23%. We can see that we do often see big spikes and big pullbacks, okay? But ultimately, they're always going up. Here is our big spike. Here is what can be deemed a big pullback, and it could be offering a good buying opportunity. Okay, guys, right. Qualcomm, a very interesting one. I have a tiny position in this company. I have 3 shares and I'm up about 25%. If you follow the channel, you know that lately I have been selling off a lot of my smaller investments that I made, you know, a few months ago. Since then, a lot of things have changed for me. Qualcomm is not one that I can bring myself to sell. When I was selling companies, one of the questions I asked myself was, do I ever see myself being willing to buy more of this company? And a lot more. And with Qualcomm, the answer is yes. I could see myself tripling or quadrupling that position I have relatively soon. So I mean, lately guys, I've been doing a fair bit of research into, you know, semiconductors. I've also done a bit of research into AMD and Intel. And to me, Qualcomm just has an awful lot of catalysts coming up relatively soon. Now, if we do look on the 1 month chart, there was a decent dip there, guys, from the recent highs, down 5.85%. And that means that on the 1 month chart, we're actually only up 4%. But if you go to the 6 month chart, there was very steady growth for a long time. I mean, this was a very slow period of time. June to July, a whole month, we were up about 3%. And then we got this massive spike, which was very welcome by me and a lot of other investors. And you can see that since then, there was some really nice growth going on, people. So, I mean, more than likely, the biggest immediate catalyst with these guys is going to be 5G technology, 5G chips. So, I mean, pretty much the biggest catalyst we're going to see in the very near future is going to be an increase in 5G chips being made. As we can see this here, Qualcomm ramps up 5G smartphone and laptop bets. Qualcomm is ramping up its effort to put 5G mobile phones within reach of billions of people and backing new connected laptops aimed at the growing number of people working at home due to the Roni. The US chipmaker launched on Thursday a 5G ready version of its Snapdragon 4 chips that will run on cheaper phones, priced at $125 to $250, that will hit markets in the first quarter of next year. Now the thing is, major catalysts coming up early next year for this company, but there are loads of little pieces in the meantime. I don't really think this is going to be dead money even. I think it will slowly but surely go up for the rest of this year, but then I think that early next year is when things will get very real. Qualcomm's president said it will deliver on the promise of making 5G accessible to all smartphone users. I mean, they want these chips to be accessible for every single phone, every single price range. Currently at a PE ratio of 49, so definitely some growth priced in, but I think that's fair. We have a lot of growth catalysts up and coming in the near future. I would personally feel more comfortable getting into these guys as opposed to Intel or AMD or Nvidia or anybody else. With that being said, guys, Intel, I'll be honest, I haven't done the most research in the world into them, but I mean, they could definitely be offering a good opportunity here at these price points. PE ratio of 9.2. They have been a market leader for so long. You'll all remember this major drop here. It's been a slow recovery since. I do think that if you're willing to hold this company for a long period of time, It could be offering a good opportunity as well, but more than likely, just so you're all aware, I won't be buying into Intel. It's always been extremely volatile, and one piece of news can lead to a 15 to 20% update or red day at any given time. But Qualcomm, one I do own, okay, as I said, it is a very small position. I am thinking about loading up, tripling or quadrupling that position. Okay, one I've been getting asked about an awful lot lately. I have been doing my research, and I'll be honest, I am quite close to investing in this company, Flying Eagle Acquisition Corp. It is a SPAC stock and it's currently trading at $12.64 a share. If we go to the monthly chart, we can see that we were up at $14 and we proceeded to drop nearly 10% in value. So essentially, who they will be reverse merging with is this a mobile games platform called Skills. So the deal has an implied valuation of $3.5 billion or 6.3 times estimated 2022 revenue. So I mean, seems like a good deal at these prices, if all of this obviously is to come to fruition. The company said in a statement, "Today we're a leader in casual esports and are well positioned to capture the global esports opportunity, which will increasingly define the gaming market. Skills is expected to power more than 2 billion esport tournaments in 2020 and facilitate $1.6 billion in paid entry fees for games hosted on its platform." And not very well known facts, I am a little bit of a gamer. I don't play as much anymore because a lot of my time gets taken up by YouTube, the stocks, etc. But just from my little bit of gaming history, esports is getting absolutely massive over the last few years. Mobile is currently the fastest growing segment of the gaming market. I mean, you guys probably see this every day. You know, all of the massive channels on YouTube who have the sponsorship deals. A lot of the time, it's a mobile game. This market is expected to grow to $150 billion by 2025 from $68 billion last year. So I mean, some fast growth, and not that I'm a pro in this market by any means, but I wouldn't be surprised if it grows faster than that in all honesty. And I mean, right now it's at $12.64 a share, which for a SPAC, I mean, you know, it's nothing. What I will say, again, I want to make it clear, I'm not invested just yet, and I still am in the process of doing my complete and utter due diligence, but you can expect a full video on these guys relatively soon. Alright guys, Microsoft. Love this company to pieces, okay? Now, they got hit for 7.5% over the last 2 days. And like with a lot of big tech stocks, this isn't really even that uncommon anymore. We can go through the 6-month chart and we can find loads of, 4 to 6, even 7% dips. But at the end of the day, when you look at that 6-month chart, what way is it going? It's going up. Now Microsoft is up 28.86% on the 6-month chart, which obviously is very good, but it is actually lagging behind a lot of other big tech companies. Market cap of $1.62 trillion and a PE ratio of 37.17. This one doesn't get covered as much of the FANG stocks. I'm not really sure why, because honestly I think it's an amazing company with so many growth catalysts. I mean, it's in so many different sectors. One thing that caught my interest yesterday was this when I was doing a bit of research. US Defense Department reaffirms a $10 billion cloud deal to Microsoft. Their cloud service is becoming absolutely massive, people, and I mean absolutely massive, and they work with people like the US Defense Department. Now, one thing I would like to point out is that the real growth for this company started in, the last 10 years or so. The dot-com bubble ruined it, essentially. If you had have invested at the pace of the dot-com bubble, you were pretty much done for what, maybe 15 years? But when we do look at that 5-year chart, it's nothing but steady upwards growth aside from the RONI. And as I just showed, I mean, it's up nearly 400% in 5 years. And it is just getting bigger and bigger and bigger, seemingly every single day. I mean, there are new news articles on this company every single day. There is always an upcoming growth catalyst. It's just Microsoft, guys. What else needs to be said? Okay, guys, and the very last company I want to cover today, yes, it is an EV stock. And before you start typing in the comments, yes, of course I think Workhorse is a buy at these levels. I think Workhorse is going to be a buy for a very, 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 very long time. But today I specifically want to speak about Diamond Peak, okay? If we go to the 1-month chart, look at the 2-day dip, okay? 2.22%. They smashed the broader market. And not only that, on the month we're up 41.5%. I initially bought these guys in the 12s. I now have a cost basis of $14. I have 120 shares. And honestly, guys, I could see myself adding another 80 plus. I'll get into that clean 200 next week. Now, that's not a guarantee. I may well not do so. It depends where I want to put my money, because there's a lot of things I want to buy right now. I just love this so much right now. I mean, obviously our biggest catalyst will be the merger happening, which should happen this quarter before the end of the year. And I mean, we could already be looking at hundreds of percents of gains from that alone. I've gone through these guys. We've so many pre-orders. The truck is beautiful. It's working. Genuinely think, alongside Workhorse, this is pretty much the best EV player right now. I mean, they have one of the biggest EV plants that is out there, capable of producing upwards of 600,000 vehicles annually. Steve Barnes is the founder and CEO. I love Steve Barnes. They have over 27,000 pre-orders, more than likely more than that by now. They have Workhorse on their side. Again, I have full videos on these guys. I won't bring it into depth, but as far as EV stocks go, I love these guys. And it's another one where I just think we're going to slowly and steadily move up, and we could genuinely see highly on type moves very soon. But guys, that is 10 stocks that I am considering buying on the dip, and that you should probably just keep an eye on for the next little while. Oh, I think that probably ended up being quite a long video, so if you have watched until the end, you, my friend, are a true legend, and I really do appreciate you from the bottom of my heart. Thank you so much for sticking around. If you did enjoy, please hit that juicy like button, drop me a comment, and subscribe if you're new around here. I really would appreciate it. And again, I want to let you guys know my private Discord channel is up. We've over 700 members strong. Hit that first link in the description and become a Patreon and get access to it. You will know the minute that I decide to buy or sell any stocks. I will let you know new stocks that I'm watching before they get put onto YouTube. And it's also just an amazing community of people that you can chat with. I know we helped a lot of people through the last couple of red days. It was nice just being able to speak to each other and, you know, have some voices of reason, as opposed to just getting all up inside your own head. So click that link. But anyway guys, with that being said, I hope you all have an absolutely fantastic day. I will see you for another video later on. Peace.